Everyone, to today's webinar. We are excited to have a good friend, Doug Bugie, with Recruitment Entrepreneur, and we'll be talking about the 9 critical factors needed to build, scale, and sell your business at a high value. Alan, before we get started, any housekeeping items?
Thank you, David. Just a few housekeeping items for everybody. Please note the primary audio connection for today's event is streaming via your computer. Be sure to check your speaker volume in your listening device or headset to ensure that it is turned on and volume is at an audible level. To refresh or reload your webinar, please press the F5 key on your PC. If you have any questions, you can send them in via the Ask a Question window. And any questions that you enter, just simply enter that in, click Submit, and we'll try to provide a response. Speaking of questions, we may have some time near the end to conduct a brief Q&A session. So we'll get to that if time allows. And due to the different information that we have provided, if your question isn't answered, it is valuable in helping us develop additional resources. Know that this webinar is being recorded, and we will send everyone a link to the page that houses all of this information for you. And if you experience any technical issues during the webcast, there is a help widget icon on the console here for any common issues. Now, the last thing I did want to mention, we will be covering a slide here coming up that has a lot of detail on it. That's going to be on the slides window, which you can increase on your webinar console to look at the details on that just a little bit better. But David, back to you.
Awesome. My name is David Garson, VP of Business Development here at Advance, and it is an absolute pleasure to have a good friend, Doug Bugie, with us today. Doug is the U.S. Country Director at Recruitment Entrepreneur and has over 40 years of experience in supporting founders of startups and scale-ups to grow, build, value, and successfully sell their businesses at extremely high multiples. These companies, both public and private, have filled over 100,000 jobs and generated over $1 billion in direct hire fees or net margin across mid-level to executive search, interim, staffing, project, and RPO. I'm excited for this fireside chat today with Doug. And to get us started, Doug, I got a couple of questions for you. Is that okay?
Bring them on.
Awesome. So Doug, I know we've gone back and forth over the years, just to kind of tee it up for our audience. Who is the ideal entrepreneur that Recruitment Entrepreneur is looking to partner with?
Hey, David, thanks for the great intro. I appreciate it. And thanks to all the people at Advance that helped put this together and my team at Recruitment Entrepreneur. Looking forward to this today. And I know how these things go out in the viewing audience, the audience itself, and they could go off the edge of the table pretty quickly in terms of being boring. I'm going to try to keep it really lively, and I encourage your most poignant, pressing questions. We're in a very, very interesting business because we're already looking for winners. We're looking for people who have already shown they can succeed in recruitment. They're either inside a company and they've got this burning desire to start something on their own, but they've been excellent billers, leaders, developers of people, managers, and they've got that pilot light inside them that says, I think I could do better myself and I want to try that. But they know they need help. And there's not a lot of organizations around the world that can give them that kind of help, plus capital. That's one category. Another would be someone who's already started their own business. They've left the confines and the comfort in many ways of corporate life. And they've hired a couple people. They've been in business a year or two, maybe 3 or 4. And they're finding what most people do around the world. And I've worked in 40 countries. I can tell you this factually, and in many cases, many, many times. I think India 50, for example. And it's the same thing. It's no different in the United States than it is anywhere else. An entrepreneur, a would-be entrepreneur, starts a business, using his or her own capital. They start hiring people. So they're trying to attract great people to work for them. They're trying to train them and at the same time keep their own desk going, billing, making money, and they divide themselves between the tasks. This can happen to anybody in recruitment around the world, and they can flounder and maybe they lose one or two. It happens to them twice, and they kind of regress to being a one-woman or one-man band, and that's where it stays. I'll bet you your listeners don't know this, David, but less than 1% of recruitment companies globally ever sell their businesses. And if they do, they're normally to employees or some kind of an insider kind of thing. But we at Recruitment Entrepreneur help businesses shape. So within about 5 years, they're in a position to have high value and be sold at a high multiple. That's what I want to talk to you all about today. So David, you're the master of ceremonies. Why don't you lead in with a couple of the key questions?
No, and that's great. I see this day in and day out, working with 500 staffing entrepreneurs today. It's leaving the big firms, going off on their own. And sometimes you need that equity partner, that infrastructure to kind of help them scale and build. But that was helpful. But what, if I were to work with Recruitment Entrepreneur, what does a successful partnership or an exit look like? Can you kind of talk us through kind of the inner workings of that?
Well, we are, yes, I'd be happy to. We're a joint venture model. So we literally join forces with our joint venture partners. We work with them to create a business plan, a mission plan, if you will. What do they want to achieve? Why do they want to achieve it? How are they going to achieve it? And we do a very, very careful analysis of how we can help them, both front office and back office. So on the front office side, expanding their business, attracting talent, developing that talent, help them with that. That's the holy grail. And then the back office is not just payroll or what you might think, but it's everything that has to do with running the business so well, it stands up as if it was a publicly traded company. Even from the first board meeting, this is the way it has to look. We'll flip the wheel up in a second. You'll see what I'm talking about. So we need people who can run with that ball. They haven't run with it before, but we know based on their track record, they're leaders who want to make a mark, and they want to stand outside the normal flow of people going to our business who only get to 2 or 3 people. They want to build a brand they can be proud of and their families can be proud of, and that will stand the test of time. And they want to be able to bring more leaders into their business, and we believe they can. If we don't believe they can, we can't work with them. But if we believe they can bring leadership into their business with our help, that's what we need, because we can't put in what somebody's life is left out. If they're not a leader in this field already, it's hard for us we don't have any magic dust. So we're looking for successful people who want to really accelerate that success and convert their hard-earned, blood, sweat, tears to crystallize into a very valuable sales event, an event that will literally make them rich. And not just because money's great. The finances that someone can accumulate with us give them the power and the freedom to make other changes and decisions in their lives, things they've been wanting to do. Maybe it's in recruitment, maybe it's something else entirely. It might be charity, it might be politics, it might be the hungry, we don't know. But it puts them in a position of actually selling their business for a high value. So we look for people who have those seeds of greatness already. We can see them. And I'm going to tell you, David, they're not easy to find. But we're looking every single day. We're in 17 countries looking for people like this.
That's incredible. And, from a recruitment entrepreneur standpoint, what value are you and the leadership team bringing to an entrepreneur that wants to go off on their own? Or, I've been in the business for a year, 2 years. I was a top producer at one of the big firms, and I just I'm not really getting that growth, right? I'm just kind of stuck. What are you coming in and doing, as an investment and a partnership standpoint?
Well, I think it'd be helpful if you'd put, as a courtesy and out of mercy to all of us who have been pummeled to death with PowerPoints, I've only got one slide, ladies and gentlemen. I'm going to put it up right now, if that can be done.
Yep, it's up.
No death by PowerPoint here. I can't see it yet. I'll let you know.
It's up. It's up.
Okay, I can't see it. Oh, wait, I have to
Okay.
move this. Let me just see. No, I don't see it. It's not up, but I know it backwards. Can you see it? Can the audience see it?
Yes.
Are you certain? Because I'll be going through the thing and making points about it, and it's not coming up on my screen. But I don't want to lose the audience. Hang in there, everybody. This is going to be good.
We got it. You can see it.
I can't
We
see
can
it.
see it.
All right, I'm going to just talk about it. And this isn't the kind of program where we were going to dissect each point of this wheel. And we call it the wheel. It's a virtuous wheel. The components in this wheel, and in fact, David, I might have to have you help me. You can just not read the language, just the major subject. And I'll ask you to do that in a second. But a lot of people feel, I'm sure a lot of our listeners right now feel, if my business is generating good cash flow, good positive cash flow, and it's been doing it for a number of years, and it's profitable, I ought to be able to sell that business. And a guy who's my mentor, the leader and founder of our business, says that's just the beginning, and he's right. And he's been doing this since his first deal with me to sell Humana International, MRI of the United States, where it isn't just, look, it's always about the money. It's always about making good profit, but it has to be sustainable. And it has to be able to, from the point where the investors buy it, it has to be able to grow at still a very high pace. So look at us as an incubator, if you will. Our money goes in, our joint venture partner money goes in. We have a global team that creates a plan based on what they need most when. Most times what people need most is to attract very, very high caliber people into their business to be doing different things, either the same things they were doing or they need to morph. For example, they're in permanent recruitment only. They've got great customer relations. They want to evolve into projects. We have people who we can plug in and help them do that. And what we do is we're doing that over a period of time. And I've got to emphasize, we can do it in about 5 years versus someone doing it on their own. If they can make the journey successful, it's usually a 10 to 15 year journey. We've frankly worked out the systems, made the mistakes, tested in the reality of the market. It's working. Our portfolio grew from 180 million to 250 million last year, just in the United Kingdom. And when I say portfolio, that's joint venture partners. So it's working, and we continue to refine it and define it. You ask any people on our team around the world, we're at it every single day. We meet every week globally to compare notes on what's helping our partners accelerate, what's not, what could we do better. But remember, the original kernel of greatness exists in our partners. They are substantial people. And they, by the way, run their businesses. We don't. We give them advice, guidance, and counsel, but they run it. I want you all to know out there, if you join forces with us, you're not going to lose your power to lead. If anything, it's going to be accelerated. You are given the reins. We're there side by side. You're not in business, just for yourself. You're in business with us. You're not by yourself. You're with us. So David, you're telling me that the wheel is up on the screen right now.
Yes, sir.
Is my somewhat tired 70-year-old visage on the screen as well?
You look great, Doug.
All right, good.
But
I'm holding up. I was 70 yesterday. I've only got a few moments left, ladies and gentlemen. So let me get this part across to you. So this wheel is not just some fancy diagram that somebody 3 years out of school cooked up out of Columbia, okay? This is a 25-year evolution. It looks very simple, but like anything too simple, it isn't. But we feel in the strategic, financial, and operational areas, a business that's gaining value has to tick the boxes in all these areas. So what we do is an evaluation of someone when they're thinking about getting together with us. We call it our balanced scorecard. And we find out where they think they're strong and where they think they're not so strong. And it's a very honest exchange. And then we go through a process where we create a mission and vision document. We start saying, what are your assumptions on how you're going to get from X to Y in the next 5 years or so? And we're looking for a company to be multi-million in size, be it perm or staffing or some kind of combination. And we're looking for revenue. I want to be straight with all of you. I want you to stay in touch with us, but for the right reasons. You know, we're looking for a overall achievement of 8 to 10 million US and profit. This is sort of a minimum range to get into the stadium and play, get into the arena, a couple of million in profit. So most businesses we start with are either people starting alone and they can get to that or beyond, or there are a few people who are already starting to motor, but they're stuck and we can get to that or beyond. And while we're getting to that, this wheel is coming to life. And David, I'm just making sure for the courtesy of our audience that we're okay with still seeing the wheel and still seeing me. All right, we all right?
Everything's great.
Cool. All right.
Everything's great. This is interesting, Doug, just to kind of throw a curveball here. I was reading a statistic last week, 20,000 plus staffing firms out there in the US. 56% of them never make it over the $1 million in revenue mark. Additionally, another 29% never make it over the $5 million mark. So PE, tons of strategics, tons of investors are getting into the staffing world. But what is it that really separates Recruitment Entrepreneur from all these other investors, in the space?
Fundamentally, we've been in this lane since 1999. Investing, growing, scaling, and exiting recruitment businesses. James Caan started it. It started with he and I getting together in 1992 and forming a MRI clone, if you will, Humana, with MRI support, by the way, and it expanded, got to be about an $80 million business in 25 countries, and MRI's parent bought it. And James was still in his 20s, but he had the bit between his teeth. And he took a company called Alexander Mann, which actually preceded Humana. It already existed. It was a small recruitment company, about 10 people in London. That's where I officed when I moved over. And he turned that into the first RPO, the first permanent recruitment, large-scale recruiter in the history of the industry. And long story short, he says, it took me 20 years, but with our programs, we can make a lot of things happen in 5. But it took him 20, but he sold it for almost $250 million US. And here's my point about acceleration post-sale from Recruitment Entrepreneur. We have a global reputation that the companies we develop and sell continue to flourish. The young gentleman that joined ZRG, which is a rapidly growing senior level executive search firm, James Absalon, was there barely a year. They bought his business, and I think it was in medical supply chain, called Walter James. It was our first U.S. exit. Barely a year later, he's running a business within the overall organization that does tens of millions of years, and he's become the commercial director of the entire business. He's in his early mid-30s. Now, he's a brilliant young guy, but he'll be the first to tell you that what he learned about being a leader and being a CEO in its truest form happened at those board meetings. He went to 72 of them on the nose, and he learned and he grew and he exchanged. Now, Recruitment Entrepreneur has subject matter experts and proven leaders in every major country of the world where this industry is flourishing. We just opened New Zealand last week. We're moving along, opening countries where recruitment is flourishing and teaching people, supporting them and backing them to accelerate their businesses so they get out of that, as you described, David. The vast majority never get beyond 5 million, never get beyond about 5 to 10 people. Most are 1 or 2 or 3 people, and less than 1% ever sell. So back to the wheel, those of you who I hope and trust are still hanging with us, you know, what a buyer wants to see. A buyer, and what we do, and it's time to sell in agreement with our partners, in agreement with our joint venture partners. We go to the market, we will find buyers, and they're global. And we will say, this is our methodology that we've evolved to build true value into a business. And they look real simple, but they are not. A buyer's going to want to see multiple sources of income. They're going to want to see a company that's able to attract top talent that can outperform their peers. How did that happen? Where did they find them? How long did they keep them? How did they train them? Are they better than the average? Is that business outperforming its peers? And David, you said it. Most of the businesses don't grow. Why? Too dependent on one owner, too dependent on the charisma and the energy and everything the owner brings to it. And they do. There's a lot of boutiques out there in the world, multimillionaires, do what they want when they want. They own 100% of their stock, but guess what? They don't grow. The vast majority don't grow. So if the owner, and I say this, you know, tongue in cheek, in the proverbial sense, the owner gets hit by a bus, bye-bye business. There's no leadership built into the business. We, from day one, are looking to flesh out a business with proven leaders who have stand on their own two legs and can show how they contribute to profitability and growth. I can tell you generally that by the time a business gets ready to be exited, there ought to be at least 3, 4, or 5 of them. And we say to the owners, as good as they are, the joint venture partners, we want it to be at least as good or better than you. And so do the buyers. The buyers want to see that strength. They know that the founder is eventually going to probably leave, the joint venture partner. They want to see what comes behind that person. What were they able to do in terms of building leadership behind them? So I know, David, in a way that's I've only covered a part of the wheel. You know, I'll go back to you might have a thought or two on that.
No, that was that's extremely helpful. And no, I appreciate the insight. You know, can you share with us a couple of success stories that you guys have had with Recruitment Entrepreneur and backing a JV? Can you kind of talk us through an example or two?
Well, I'll give you the broad example first, because it's really telling. James Caan did not form Recruitment Entrepreneur until about 6.5 years ago. So he had any number of exits, more than 10. One was Alexander Mann. That's a big event, $250 million. I wish that the company he and I sold was anywhere near that. I might be sitting somewhere else on the Caribbean or something right now. But the point is, those were good, and he kept going. And he even, in some cases, clubbed businesses together and sold them. And he became very, very famous. He's number 7th in the world on LinkedIn now with over 3.5 million followers, mostly based on what he's achieved in the recruitment industry, investing, building up leadership, building up prowess, brand, market impact, productivity, profitability, strength. But he kept going with basically lawyers and accountants. Only till about 6 years ago did he did when we were together. We had a team of people who would go into the offices and execute on the programs that the offices would agree with. He took that further. Now we have a team of people that help people with their corporate governance issues, their branding, their anything they're doing to try to attract talent, their overall the finances, where each desk can be tracked for profitability, and you know why somebody's making it, you know why they're not. Very, very close attention paid to concentration of clients per desk, per unit within the business. What's the profitability? What's the sustainability? And then, of course, in some of your cases out there, you're already in staffing, maybe you're only in perm. What has the business morphed into? Can it do projects profitably? Starting small, getting larger. Did it go into staffing profitably? What was its impact? What's its customer base? What's the repeat business? We ask these questions internally to flesh out this wheel, because we know that's exactly what the buyer is going to be looking for when they're evaluating should they buy a business. Because let's face it, our business is pure people. It's information and people. So when you're selling one, you're basically selling air. There's nothing there but the knowledge and the people. And look at the size of the industry it is globally, measured in billions and billions and billions of dollars. But if you want to go out there and buy one, basically you're buying the people who drive it and what are their systems, how do they measure themselves, how is their track record, how sustainable is it? Did they have one flash in the pan year and everything else went back to average? So, I pulled one point out of the wheel here, David, corporate governance and processes. That's just not us teaching somebody to have a good board meeting. A buyer's going to want to go back no matter how many board meetings existed, and they're going to want to see the structure of them, the information gleaned, and what was done about it. And they're going to go back to board meeting number 1, month 1 after that company joins forces with us. And they're going to go through every single board pack to see the reality. No business goes forward without bumps in the road. No business tries to evolve and immediately become successful. Somebody's in perm and they want to go into staffing. Doesn't happen. It's not real world. But now we have a team that can help them with whatever comes out of those board meetings and that governance. We can apply the right people around the world to help fix and drive forward where they're lacking. And it's an interesting point, David. Even though we're looking for stars and really get ahead, go ahead people, funnily enough, we're also looking for people who are humble, who still are learning, who accept advice, even though we talk to people who are outright millionaires already, small boutique, it can happen. Will they listen? They've been in the business 20 years. They've done a lot of things. They've achieved some great things. Do they still want to learn? Are we going to be able to collaborate with them and work with them with our world-class team? Or are they going to say, I've already done that, got that T-shirt, right? So we're very, very particular in terms of, they got to be right for us and we got to be right for them to create, the outcomes on this wheel. Is that clear, David? Am I making my point clearly?
No, that was great. No, and I appreciate it. I mean, you guys clearly have the processes, the playbook, the people to help a JV or a company, build, scale, and ultimately have a beautiful exit. I know we've got a lot of people attending today and maybe a lot of people that are potentially interested in, hey, bringing in an outside partner or going off on their own and, working with somebody like Recruitment Entrepreneur to help them build, scale, and sell something. So I'm going to see if there's any questions from the audience to give them a chance to kind of chime in here.
I might say while you're gathering them, so we don't have, just dead air. I would encourage, a lot of people might hear this and think, no, I could never do that. That's not for me. I'm not mature enough. I haven't got enough momentum financially, or I haven't been out on my own long enough from wherever I left, or I'm going to give it another year, see what happens. I would encourage you, and there's quite a few of you on the line, to think twice about that. Ours is not a wham, bam, thank you, ma'am kind of a business. We work with people 6 months, 8 months, 10 months. I'm working with a gentleman now. It'll be a year in July. We really study you and you really study us. You look at our background, you meet our people. We go through the numbers very carefully with you. We analyze, we think, can we do this? What about the side wins in tech? What about the fact that maybe you had a big brand behind you and you left it, you're starting on your own, and now you're not only hiring, but you're going to be running your business with us helping you. Still, we account for those pressures. So we're patient money. We're not looking for miracles. We're not looking for overnight successes. This is roughly a 5-year journey, and it's not in blood. Somebody doesn't have to get out in 5. So I think that if you have some hesitancy saying, no, I'm just not ready for this kind of discussion. I hope I'm coming across in this webinar. I'm relaxed. I like to have a little fun. I love transparency. We can be very, very cool and clear with one another, and we can have a very confidential exchange of information. And believe me, if we have one or two, I guarantee you, either you or me, either one of us can get off that bus without a problem at all. I'm in touch with thousands of people around the world. You know, how many are actually going to do something like this with us? Takes a special person and a special set of circumstances. But I can tell you, when we decide to get together with someone, we win. We have not had anybody go away. We have not had to have any cash calls. We expand through COVID at 40%. We're expecting expansion this year at 25%. And I mean, that's the billings. That's the net fee income of our joint venture group. So we have great leaders and we have great ways of supporting them. And it's working towards getting to those valuable exits.
Great. So Doug, we've got a couple of questions that I'm just going to read so everybody's in the loop on here. So we've got a question from the audience. How does the investment work? Does it cost the entrepreneur any money? How does the equity structure work with RE?
Broadly, because it varies per deal. What we do, I mentioned it earlier, is we go through a process of self-evaluation of the would-be partner. And we deal with what we can do and do we think we can help them achieve the kind of success they want to achieve, which is a multi-million-dollar exit. Could be multi. We create a plan based on very carefully thought through assumptions. What are the people going to be doing? What are they going to cost? How long to collections, for example? It varies. How long does it take to build a contract book? How long does it take to make permanent fees at various levels? What sectors? Everything. The joint venture partners have a vision. We put it together with them, and then we ultimately create a plan. And in that plan, it shows the low point of cash. It's going to cost a certain amount of money to pivot the business, to get it flying on a sustained basis. We calculate that, and we also calculate, and this is very, very important, listen carefully, please. We treat our investment and the investment of the joint venture partner. And yes, there is an investment. They own real shares. They invest part of the startup monies, the capital, and they own it. But we treat the initial investment as a loan. It doesn't disappear into operating. And it's the first thing paid back when the business begins to move cash positive. Once that phase is done, the next big event is a profit pie. And why do this if your profit pie isn't going to be bigger? We're not in this to tread water. We're in this to increase your profit and everything that's on this wheel, which I'm happy to send you a copy of and explain it to you personally. We do all of that with the intention of getting to a point where there's a dividends paid based on the pie. It can be significant money. Remember, the business is on its way to making 1 million, 2 million, and plus. The dividends can get quite large. And there is then, and we just calculate for roughly a 5-year period. If it hits X, depending on the shape of the business, is it perm only? Is it perm and staffing, which happens to be a higher multiple? Is it projects? What is it? And how sustainable are those income streams? And that raises the multiple, right?
Yep.
So we calculate the range of multiple at the end, and we give the would-be partner a full picture if we think they're worth all that effort. As you can imagine, that's a lot of work for both parties, but we really apply our best people to it. We're careful about it. We want to make the right decisions. I might add, because it's a good, solid core question, joint venture partners with us are paid. The venture pays them. We do not expect them to go along for the ride, put money in, and work sweat equity. We come up with a package and a base and a bonus, because we don't want them opening their eyes wide at night worrying about their families. But on the other hand, it's not going to make them rich. What's going to make them rich are accumulating dividends and an obvious large exit. But we want them to be okay along the way. So I think it's a very fair program. And you asked the question earlier, David, who else is doing this?
Yeah.
Let me pause for a fact. No one is doing this in venture capital. No one is doing this. Not with the teams, combined with the money, combined with the experience of James Caan and the rest of them. It is not done. So if you're thinking about exiting, and you don't know quite how to do it, it doesn't hurt to have a conversation. That's all it is. Just a conversation about where you are, who you are, where you'd like to go, what's your dream, what's your vision, why do you want to achieve that? I'm as interested in that as anything. Why do you want all this money? What are you going to do with it? You're going to design airplanes and fly around, the world? What are you going to do? It's interesting to know with people. They have all kinds of different drivers. But in the end, everybody, it's got to look like that wheel or we can't do anything with it. That's what we can help you do.
Got it. No, thank you. Questions are kind of flowing in now. So I just want to kind of spitball it. So, Doug, you talk a lot about an exit, right? Exit this, kind of 5 to 7 year time frame. Well, what if I'm a JV partner or the entrepreneur? I team up with you and the Recruitment Entrepreneur team. And what if I don't want to exit in 5 to 7 years? Who makes the decision when we exit, and what happens if we're not aligned on the exit strategy?
Great question. Think about it commonsensically. Mm-hmm. You're the joint venture partner. You're leading the business, and you've got the business looking really good with us. You've got that multiple leadership cadre. You've got the business isn't just dependent on you. You're making solid profits. It looks like there's a good future. You're doing some things that show some real promise too for the next buyer who's going to want to see acceleration, right? But you're also operating in a community. We're global now. And we share a lot of ideas. We share a lot of business. We share our ups and our downs. We got our arms around the shoulder or that a boy. It's fantastic. And you don't want to leave, but you're making great money. You don't have to leave. We have a lot of people who enjoy the culture and the community so much. They're making great money. They're making better money than they ever have. 40% increase last year, 180 to 250 million. Some of them are having the time of their lives. But ostensibly, everybody goes in for an ultimate exit. And sooner or later, that's what they want to get to. But the pace of it really is as much up to the driver, the leader, as it is to us. A buyer's not going to come along, David, and questioner, and see clearly that the leader of the joint venture is not interested in selling and they like to give it a couple more years. Maybe they're starting to expand internationally and it's working for them. And they don't want to sell. Well, no buyer's going to buy a business where the leader doesn't want to sell it. That's got trouble written all over it, right? So it's a mutual decision. And it's very clearly spelled out. But I'll go back to another point.
Yeah.
The driver and the joint venture leader of that business does make the decisions. For example, they make hiring decisions. We don't go in and say, oh, we interviewed that person. We really don't think you should hire that person. It's your call. We believe in you. We back you. But we help you find great people. We help you create a training system to raise them up. We help you as an owner, driver of the original business and now our partner to grow yourself. We have mentoring programs and a leadership program we put in place for each and every joint venture partner.
Great.
So
yeah.
that's that. I mean, I think I've nailed that one.
No, absolutely. Thank you. We're getting a lot of questions right now on valuation. How does RE value a partner's existing business? What's the estimated average multiple on EBITDA for direct hire versus direct hire and staffing combined? Do you mind kind of talking a little bit about, what you're seeing in terms of valuations, or if you were to buy an existing business, somebody who's kind of stuck, how you would value a company like that, or what you would do in that situation?
Okay. These are great questions. It sounds like at least some people are out there really engaged because they're asking very, very good questions. Part of the wheel even gets to that. I'm looking at it here. It says number 6, reliability of forecasts with track record of budgeting. And then you have income concentration by clients. In other words, you can't have too many dollars or whatever currency you're in with one client. You've got to have spread. You want to be able to make forecasts on your future production that are accurate. And a permanent alone, and James says this, James Kahn, is pretty chunky business. You can get repeat business with it, but it's still one placement here, 2 there, 3 there. It's very transactional. It can be very, very lucrative, of course. We like to see businesses that if they're going to be in perm, and we don't force this, that they start looking to get more and more of wallet share of the share of their customer spend on talent. And we position them to do this. We have programs to do this. So they're not as transactional. And the less transactional somebody is at the time of sale, the higher the multiple. So the more predictable the income is, the higher the multiple. And that's why we don't advocate it as a part of the model that someone must do this. But we know that our portfolio now, if they're not in staffing, we're helping them evolve to staffing in one way, shape, or another. Because staffing is with any number of people out and staying out for X number of months or even longer, 6 months, maybe longer, 12 months, 18 months. That's predictable income at a predictable margin. You combine that with perm and you get a higher multiple. Whereas perm in a decent market might be a 5, staffing and perm in a decent market, and we're in a decent market, by the way, we're not in a recession, would be more like a 10. And so that stands for itself. That doesn't mean don't be in staffing only and don't talk to us if you're in perm only, because you can still get, what are you trying to get? You're trying to get a multiple of profit with a business that resembles what you're going to see in this wheel. And David, I think we should just send people the wheel. We'll talk afterwards. So we can get you into a legitimate multiple of profit kind of sales event. It's very difficult for one to get into that on one's own without proper representation, finding the buyers, getting the legal set up, all the due diligence, coming up with warranties, things that can go wrong that have to be built into the contract. It's very complex. Some exits we've had literally go into multi-million dollars in terms of the due diligence done at the end. The buyers who buy these businesses from us are really savvy global companies, and they do their homework. So we've learned from this. So we do our homework and we make sure that to get maximum valuation, the business morphs to look a certain way. And we benefit, and so does the original joint venture founder benefit. We're all rowing the same way. We want to increase the valuation to the maximum point before selling it.
No, thank you, Doug. And some people had very specific questions, and Doug will follow up with you individually after this, just because they're very unique and very specialized for your particular business. As we're kind of going through here, I've just got a couple things that have kind of popped up. You had touched on this, but, from a day-to-day standpoint, how much involvement are you having? I mean, is it daily calls, weekly calls, monthly calls, more board advisory positions? I'm just curious, just painting the picture. I'm a JV. I've been at Adecco or one of the big firms for a long time. I'm ready to go off on my own. You believe in me. We can work out a cap table that works for all of us. What does the involvement look like? I mean, is Doug calling me every day? Can you kind of peel back the onion a little bit more from a tactical standpoint?
Yeah, sure.
On how much?
And I would emphasize, and everybody on this call knows this. It looks to me like you're all in your own businesses, the majority, and that's great. But it could be that you're with a multinational, no problem. I would encourage you, and David, I'd leave that last slide linger, so people have time to actually capture the email and the phone. I have no problem with people calling me or text me and say, Doug, I saw you in the webinar. I mean, if you really want to learn more about this, it is not a big sales pitch, everybody. This is, are you right for us? Are we right for you? We won't know everything on the first call, but we'll have a pretty idea if we should even make a second call. And I'm happy to give you my time and invest that time to talk with you about you, your business, your vision, and what you'd like to do. And to see if mutually it makes sense to continue the discussion. That's it. End of story at the beginning. Okay. So I think David, I would encourage people to do that, because the questions are good. I can see where they're going. I think it's great. But I think that since we're about the end of the webinar, we should just make sure we give people time to capture the contact information, not go off the air. And then, this is me. I'm not just some I'm not the Wizard of Oz or anything like that. I'm a normal human being. So is James Caan. We've learned a lot. We've tried a lot. We've failed a lot. We succeeded a lot, but we kept going. And now there's this beautiful global team around us of people who have done great things in their own countries and regions that are there to help. And we've got about 75 people in London. There's a gentleman in visiting us today from America, checking us out. And we want to be checked out. But it all starts with a conversation. And I think that we should make that easy for people, David, and, and move from this platform.
Got it. No, thank you. And Doug, just appreciate, obviously everything, your time, your partnership, your wisdom. So if anyone is interested in having a conversation with Doug, learning more about becoming a JV or partnering with Recruitment Entrepreneur, please look at the screen. Doug's contact information's there. Very easy to get a hold of. If anything, he's always happy to just have a candid conversation with you. For those of you that asked really specific questions about your individual businesses, Doug will follow up with you after this webinar to set up a call. But we appreciate everybody's time and have a wonderful week. Thank you.
Thanks, everybody. Thanks for coming. Thanks for joining us. Looking forward to meeting you. And thank you, David. Thank you, Advance. It's been great. Appreciate it. Let's go. Give me a call.